Hello and welcome to another episode of Revaluate with me, Fola. Today we're diving deep into the heart of the Canadian real estate market. We're unraveling its mysteries and uncovering the secrets that shape the roofs over our heads. So, whether you're a first-time home buyer navigating the turbulent waters of the unaffordable prices out there right now, or you're a seasoned investor keeping a keen eye on market trends, then buckle up. Because in this episode, we're demystifying the current state of the Canadian housing market, we're exploring the dizzying highs and the concerning lows and everything in between. From dissecting the stages of a potential bubble to dissecting the policies that wield influence over the housing landscape, we're leaving no stones unturned. What impacts do investors really have on the market? And how do their moves send ripples through the entire real estate ecosystem? Whether you're a homeowner or a prospective buyer, or just a curious mind, you're eager to understand the intricate dance of the housing market, you wouldn't want to miss a second of this conversation. So get ready for a roller coaster of insights, revelations, and expert analysis as we navigate the complex terrain of the Canadian real estate. So, it is my honor to have a distinguished guest, the principal broker of Flynn Real Estate himself, John Flynn. So, hit the subscribe button and smash the like, because it is time to revaluate. So first of all, how are you doing today, John?
I'm good. It's every day is real estate for me, whether I'm showing houses or listing houses or just looking at the data, right? I love the data. I love to just look. I analyze it every day. I make my charts. You know, I'm not a professional data analyst by any means, but I would say that I am a professional in real estate, and I've witnessed a lot of things so that I can translate that into my charts and just trends that I see happening and unfolding.
So to start with, I'm gonna walk you through some of the data that you mentioned just now, and let's see where this leads us. So if we look here, the first information I got is that the average household income in Canada is about $75,000 yearly. And I think that's very important. So in the chart that we have here, you realize that, let's start from the West. In Alberta, for instance, the median household income is $67,000. And I believe this is after taxes. The maximum affordability, right?
Yeah, sorry. And I believe that now it's hard to get this data. I've looked at this data, and there's inconsistencies in the reporting over the years, right, and it changes. So it's a lot of it is after tax, and of course you're dealing with median and average, but of course you've got median here, and it looks like it's accurate.
Right. I think you're right about that. I searched the net, and the problem sometimes is I think Statistics Canada also, they don't report 2023 data right now. For instance, the last I saw on their website, it's 2021 that is reliable. Mm-hmm. But I think we can work with this. It's close enough to the average of what I saw on different platforms online.
Definitely.
Okay, so let's say the median household income in Alberta is 68,000 equivalent. The maximum affordability in that province is about 313,000 for that median household income. And then the benchmark price, which I don't really like, honestly, I prefer the average price.
I talk about it all the time. I hate it. Yep.
All right. It's about close to $480,000. In Saskatchewan is about the same thing. Let's come to Ontario, like midpoint in the country. The median household income after tax again is about 61,000, and then the affordability for that is 283,000, and then the benchmark It's crazy, 920,000.
Mm-hmm.
And then let's go to the East Coast. You have Nova Scotia, for instance, right? 52,000 median household income, and maximum affordability will be 240,000. And then the benchmark price will be 400,000. Now, I think that's worth noting there. Now, I wanted to get the average prices across different cities in the country. So I took a snapshot from this website, which I believe is reliable. For instance, let's start from the west again. In Edmonton, the average price as of September is about 395,000. Calgary is about 550. I think they've been going up somewhat.
Mm-hmm.
Vancouver is off the roof, 1.2 million. And then you have right here in Ontario, Ottawa is about 675,000. And you go all the way to Nova Scotia. I didn't capture that, but they're right around 400,000.
Yeah,
that is important as well.
Looks fairly accurate. Right? Yep.
Okay. I'm glad you can say that. So let me take you a little further. If that's the case with buying a home in Canada right now, maybe a rental will be better. That was what I thought. But then you go to Vancouver, the median rental in Vancouver is about $3,400 per month. You come to Toronto, is about $2,900. Let's come to Calgary, is about $2,000. Even East Coast Halifax is about $2,000 for the average rental. And then in Ontario here, let's say in Ottawa, for instance, is $2,200 per month. So to think about it, even rental is not anywhere close to better, generally across the country. So I'll show you one more chart, which was, I think, the one you sent to me, actually, and we can dive into the conversations from here.
Mm-hmm.
So the chart you sent me, I should probably let you talk more about this, but just to give context to my thought process here, the resultant effect of looking at this kind of data is that whether you're buying or you're renting, you're going through a financial squeeze right now. The implication of that is, I think I saw a report on the Financial Consumer Agency of Canada, FCAC, and they say more and more the percentage of Canadians who are able to keep up with their household expenses is gradually dropping, and has been dropping for a long time. Actually, I think much more since 2020. We've had a drop in affordability of homes, and even we see also that the household debt levels are rising significantly since the pandemic. In fact, by June of this year, compared to GDP, the deficit in the economy, right, compared to the GDP, outpaced the nominal GDP across the country. In fact, I think right now, the debt levels is about 102% compared to the GDP in Canada. Among the G7 nations, the report also says that Canada is the most vulnerable to any global downturn in the economy. So if we put all these into perspective, the Canadian household debt outweighs the GDP. You have high levels of inflation right now in the country. I think it's been dropping significantly in the last couple of weeks. But put this into perspective for us, especially compared with the chart that you had sent me here about home affordability and ownership in Canada.
So where do I start, right? So I could go on for hours about this, but I'm just going to, probably talk about the most important thing is affordability. And, we look at history and homes were affordable. Like, we look back 10 years and a lot of people would have thought that they weren't affordable for many people, but you compare that to today and it's a whole different ballgame. So this chart here that I sent you, now I just updated this yesterday before I sent it to you. And this was off of some CMHC report after they had a housing crisis in the mid-70s. And this report, I believe, was from 1978. It shows 1976, but the report came out 2 years after. And so I added in, the data that I have access to, or accurately have access to, because during the 80s and 90s, the data the record keeping from Statistics Canada and whoever else, it's hard to find the accurate info on. So I actually updated, and at the bottom there, you'll see the 2023 in the red. And, you mentioned it was around 75,000, and I had that until yesterday, and I updated it to 80,000 for the household income, or for the average salary, because I gave the benefit of the doubt to wage inflation. And so I said, I better update this, because even I had to update the price from 670 to 680,000. So when you look at the fundamentals, and I forget whose statistic it is, but it's like a known fact that, the average house price to family income should be 2.5 to 3.5 times, right? So the average house price should be 2.5 to 3.5 times the average household income. And if you look back in the 70s, it was funny, because it actually went down. It was the affordability that went up to 35% there in the next column over. And that was mainly due to interest rates, I believe. But it got up to 35% of people's income they were spending. And, there was a crisis at hand. And of course, you come back down now to where we are at the bottom of that chart. And, we were approaching 5%, five times the average household income for the average house price in Canada way back. Like, this was, again, before this chart, or even I made this chart, it did drop at certain times. And I remember looking at one point, and somebody said it was 5x, and I think they were off, because this was 10 years ago, and you can clearly see on this data it's more than that. But they said it was approaching 5x, and that's into dangerous territory for housing and for the country. We're way above that, and we've blown so far past it. It's kind of become normalized, right? So, and I use the old story, and people comment on this all the time on my Twitter or X, and it's a very common comment where they will say, people, back 30 years ago, or in the 70s or 80s, you could get probably more like the 70s and 50s and 60s, but regardless, you could get a job out of high school with no education, and you could buy a house and a car and start a family. And now you're getting out of college or university, and you can't afford any of those things. So, as time has progressed, it's like we've taken on, and of course now, not only can you not afford them, but you have debt on top of that. Back then, you would start with no debt besides, a house, which was kind of considered good debt. And now you have debt. You're starting at a net negative financial position. And now you're supposed to be able to go and afford one of these homes that are more than double the household income. So yeah, affordability. I'm all about affordability. I'm not an investor-driven realtor. I've always worked with families, and yeah, when it's so out of whack, we end up in this situation, and it's crisis, right?
Right. So if I can follow up on that, from your experience, how much do you need? Like, how many times over do you need relative your household income that you could qualify for? I should rephrase that. Like, how much can you qualify for, generally speaking, from the lender with respect to your household income? Is it like 3 times or 5 times or 10 times?
So so just like in general, you're speaking like the average
in general,
Canadian,
right?
Yeah.
Right.
So I'm not a mortgage broker, but I would say that you'd probably be in that 3 to 4 time price point of your household income. Yeah.
So if that is the case, from what you've been seeing since, especially in recent times, maybe even more so since the pandemic, do you see first-time home buyers able to afford homes generally?
Not many, no. Most first-time home buyers, and again, we're talking usually young people, they've given up on home ownership a long time ago, and now, and I didn't realize this. I was in BC, or actually, I was on the border of Alberta and BC. I don't know, maybe a few years ago, or maybe it was a couple years ago, on vacation, and I was talking to a young person, and they said, I was talking about housing, like, of course, in BC, like, you're not going to be able to afford a house there. And she said to me, no, I can't. She said, not only can I not afford a house, but my friends and I, we can't even afford to have babies. So this is the mentality now that, and this is very common. Again, I've talked to many people about this, and they will say, yeah, I can't afford to have a baby because now with, the two income working families and daycare and all these extra expenses, they're scared to have babies. And that's, again, it's a pretty big net negative for, the society in general.
Right. Right. So the question is, how did we get in this mess?
I would say one word: greed. That's what I've seen, and it's not just in the real estate industry. It's just in general. Whether and I'm not going to blame it on one industry or one person or one corporation, but it's a mix of everything. People need, they need three homes now. They need to buy rentals, and of course they've had the opportunity with rising asset prices. They leverage their existing assets to buy more homes, and they'll justify it with saying, well, I need something for retirement. And so again, their retirement is taking away from young people's lives. So again, it's greed, whether it's corporate greed, personal greed, investor greed. It doesn't matter. It's pure human greed. And again, everybody wants to protect their own family and do what's best for them. So not everybody's a Mother Teresa, but that's when, there comes a fine line between taking care of yourself and your family and indulging in more than you want. So consumerism and greed.
Right, but when you say greed, though, let me play the devil's advocate here. I think more and more too, we're seeing that people have to return to work after retirement, and the trend is not, it's not really good when you look at that, and people recognize that they need good income, especially when you think about the impact of inflation on your retirement pension, and sometimes how unpredictable the future could look. So securing your future will be quite advisable. But I think the problem is in securing the future, especially in Canada, the only asset class that we've looked to in a long time is in real estate. We've we've looked away from several other asset class that we could possibly invest in over the years, and I think that's one of the reasons that we have the so much volatility that we have in the housing market in Canada right now. So maybe it's not so much of greed as much as the available options to people generally within the country is limited, or they don't know about the available option, and it looks like the only plausible one is to invest in real estate. What do you think about that?
I think it's a valid point, definitely. And maybe it is not just greed. Maybe it's greed caused by fear, right? The fear of not having enough to retire and things like that. But what I see, and I say greed, and it was a very simple answer, right? I'm not going to change my answer, obviously, but it's because I see the greed in real estate, and I see it from investors. I see people make hundreds of thousands of dollars, and they're not happy, and they say, well, that's it. You used to make 10, 15, or $50,000 on a house in years, and it's like you won the lottery. And now people are making hundreds of thousands of dollars, and they're like, well, this is all my home is worth. Like, I bought it for 250,000 7 years ago, and it's only worth 800. I'm not selling it. It's not worth selling it. I'm like, like, so it's just this human greed. But again, what's the underlying condition? There's lots of underlying conditions. Everyone has their own reason for the greed. Some people, yeah, they want to fund their retirement. Other people want to build an empire, and they don't. I always say, what about your kids, or what about your grandkids? Like, you'll own these homes, and what about their cousins, right? You're not going to leave your net worth to your kids' cousins. You're going to leave it to your kids, right? So it's just this greed and consumerism that's happening in life these days. everybody uses 10 times more than they need to, and 10 times more than we did when we were kids. When we grew up, we had 10 or 20 toys our whole childhood. Now they have 10 or 20 toys a year or every few months. So consumption, right? And that's the thing. Like we talk about building houses. I don't know if we're moving on to supply and whatnot, but they can build as many homes as they want. But if everyone's buying 3 or 4 homes, it won't be enough. And that's, again, we talk about, where I've had many charts that talk about investors and how many homes investor owns, and it's been in the news, and they've never owned as many homes in history as they do now. Now that was a big trend in the late 80s, from what I've read, where the real estate investment really increased until the bubble popped, or the market changed, and then of course investors were forced to unload them. That they could. Some investors, right? Some investors can hang on, other investors cannot. So yeah, it's all part of the cycle too, right? The greed cycle. And if you look at, I think that you might have that chart also, the stages of a housing bubble. It gets into that, the greed phase, and then it goes into fear after. So maybe it was started with fear, a fear of retirement or fear of whatever, but I don't think it was. I think that might have been a few people. I think it was mainly just the greed of wanting more real estate, because real estate's a very attractive asset to have, right? When I own 4 houses, you go around telling people, it's a very admirable thing, people think, but I don't think it's as admirable as it used to be, because if you go around telling people you own 4 or 5 houses now, and their grandkid or whoever cannot afford a house, they're probably not going to respect you as much as they did before this crisis.
Well, I will take that as a valid point. So let's look at the trend in the market again. I think prices have been on the rise for a very long time. Actually, you talked about it in passing just now. Since the bubble in 2008, housing has actually been on an upward trajectory since that time. I think what really put the nail in the coffin is the pandemic period. In fact, I will jokingly say sometime that yes, we faced the pandemic, and you don't want to undermine the impacts of the pandemic on people's lives, but we see much more right now. The impacts of the pandemic stare all of us in the face, and we're paying for the cost of the pandemic right now, including what we're paying right now on housing. So the pandemic put the nail in the coffin with respect to housing. We had issues also due to the pandemic. Then we had issues with the supply chain that was broken down, and that was due to the pandemic, right? And then demand and supply, because there was relatively low houses available and a lot of demand on them. And then you have governmental policies that changed also. Rates went really low, almost impossibly low, like we've never seen before. And then you have compounded on top of that, which we'll get back into that in a moment. Let's not dive into that. You have immigration, and then you have foreign investments, like you've talked about, and you have strict government regulations as well about housing. A lot of people have talked about that. Now, you add all of that together right now into the way the Bank of Canada's messaging came across during the pandemic. I remember then they were saying, oh, this low interest are going to be around for a very long time. First of all, in my mind, then I thought, that just sounds crazy. Because from history, I don't think that has happened, that you have extremely low rates being around for a very long time. But the messaging was poor. It was misleading for some. And then right now, I think there's still a misleading part of the messaging. Now they're talking about soft landing. I think you talked about that in your last recording as well. They're talking about soft landing. And in my mind, I think soft landing simply means we're going to have a recession. And somehow, I believe we're either almost in it or in it already. At least you see that in your credit balance at the end of every month right now. So when you put all these policies together, being a player in the industry, How has that really wrecked things for people, and even for people like yourself in business over this period?
Yeah, I think it just created this imbalance, right? And of course, when governments, usually from what I know and what I've read, governments, when they start messing with things too much, this is what happens. Um, and of course, with the pandemic, it was tough because there was nothing else to do but buy homes, right? So we came out of this pandemic, they had, the restaurants shut down, everything shut down, but you could still go and buy homes. So of course, I worked all through it. Um, but I think that, yeah, the government and their regulations, yes, they do hinder house building at all levels because it's they talk about it, right? The opposition talks about it, and it's trying to get these homes built. There is so many fees, so many regulations. It takes so long to get it done, and of course there's regulations there for a reason. That goes into Airbnb. You can get into all kinds of stuff with that, where you need regulations, you need safety codes, and all the rest. But it seems that we just keep piling them on, and fees. They keep piling fees on. They keep piling. I think we have a chart with the land transfer tax showing the government has made more than anybody because they have never redone their scale on the land transfer tax. They have it based on this old system where houses were $200,000 on average. And of course, they're collecting massive amounts of money, the provincial governments, on the land transfer tax. So,
If I could pause you there for one
yeah,
second, I would just pop up on the screen, actually, the chart you had sent me earlier on that shows the land transfer tax. You can continue, John.
yeah. So
I
yeah,
think
let's
you're
look at the
referencing
chart
this.
here. Yeah. So yeah, you can see, and again, the base year is 2005. Everyone's at the base year of 100, and yeah, the median household income has gone up 75% since then to 2023 now. Of course, house prices in Canada have gone up 169%. And of course, look at the land transfer tax, the government land transfer tax, because of the scale, the higher the price, the exponentially more they collect. Um, and there's been a lot of transactions that have happened throughout the pandemic. So and there's never been any forgiveness on the land transfer tax. So when you close on the average house in Canada, it's $10,000-$12,000 you're paying when it used to be $2,000-$3,000. So yeah, of course, the government's, I think, always benefits the most with tax opportunities, and of course the government's got bigger over the years. But yeah, the pandemic was going back to your first comment in this section. The pandemic really did enable. We already had a bubble before then, and it was working itself out. We hit 2018, 2019, and prices were leveling off, and it would have given time for wages to catch up, and maybe it would have been slow. But then the government, with the low interest, well, we call it it's not the government, it's the Bank of Canada, but of course the government influences the Bank of Canada, and anyone who says otherwise should probably, I don't know, like we know, right? They're independent, but at the same time, you had the Bank of Canada saying interest rates will remain low, be confident, and you have the Prime Minister saying the same thing around the same time. So, yeah, it was an enabling situation from the government and the Bank of Canada. And they were scared. They were scared that, GDP was going to drop significantly and there was going to be blood in the streets. And I think that's another part of the problem nowadays, where we live in the society, and this is a societal thing. And again, doesn't matter on what your opinion is, but I think everyone could agree. We live in a society where nobody wants to see other people suffer, whether it's physically, mentally, or financially now. And that's part of the problem too, right? It's like kindergarten, right? Everybody gets a prize and nobody loses. And that's the problem. Like they do everything possible to avoid a recession, and a recession is a part of an economic cycle, right? You have good times and you have bad times, but they're trying to avoid the bad times and they're sacrificing the greater economy, in my opinion. So
Okay, so let's move on from there now. I think we've been able to establish the trend in the housing market has been awful for a long time. There are several contributors to that. The government policies, greed you mentioned, greed on the side of everybody, including the corporate buyers or corporate players in the system. But now, when I look at the prices, and on a personal note, so I had relocated to Ontario just a couple of years ago. This is during the pandemic, actually, and I needed to buy another house. It was almost impossible for me to buy a house at that time, and the reason was there was no way I could pay the prices that were out there at that time, plus the insane competition that was out there. It's almost like you're throwing away your money to the seller. That was the way I viewed it at that time. And I knew from experience, dealing with stocks and investments generally, I knew it was a matter of time. Whatever goes into the system has to come out. It's like it goes up, it must come down.
yeah.
So I waited for an opportune time. Luckily, that came. But when I look at the way you've discussed topics around the housing market, and I must say it's one of the reasons that I was endeared to your analysis, alongside the fact that you use all these charts that represent the data in a more visually appealing way. But you are very optimistic about prices going down. And it was uncommon during the peak of this housing crisis that you see any realtor or any business owner that wanted the prices to come down. Why are you optimistic? And why do you take that position of prices need to come down? Does it not affect your income, so to speak?
So I sent you my income chart, right? So and again, this is without putting numbers, because that's, people don't put their income out there. But you can show my chart here, and it's publicly available. And this is my actual
Right.
real estate income without the numbers, but it is to scale,
Right.
to show.
Show
Like
you
we had,
here.
yeah, we had the great times in 2021 was the best year, and many realtors, or most realtors that have seen this, agree that it's representative of theirs. Now, of course, real estate agents, most of them are in it to make a living. Well, I would say all of them are in it to make a living. And of course I am too. Like, this is, I started in 2004. It was to make a living. Actually, I wanted to drive a nice car around, not be stuck in an office, and make a living, right? Other ones, they just want to make lots of money. They want to be top agent. I never wanted to be the top agent. I just, it's not my thing. But anyway, so here you have the chart. It's now when I'm at the point where I've been doing it for almost 20 years, actually. It's I think you mentioned 15 plus. It might have been on my bio, but yeah, it's closer to 20 years. I'm established. I'm not a rich person, but I live very frugal. I live for the bad times. In real estate, you can't live like for the good times, like 2021, right? If you live like you're making that much money every year, well, you're going to be in trouble very shortly, if not already. But my focus has always been on families and end users. And over the past 5 years at least, I've just seen, again, they're not usually greedy for the most part. They just need a house to live. They want a home. It's not, not an investment. Yes, when you come back to sell it, in 5 years, whenever they decide to sell, of course, they don't want to be losing money. They want to have a nest egg, and they want to move on to a bigger house or whatever they need. And I was so far away from that. And I said to my wife, within the last couple of years, probably 2021, I said, I miss real estate, because the way when I started, I worked with families, and this is what makes me happy. Giving, meeting people there. I can't say I give them the keys, the lawyer gives them the keys, but meeting them there at the house after they move in, or, signing the papers, and they're so happy they have their family home. That's what real estate is to me. Real estate is not an investment tool, a commodity that people are, trading without emotion. It's not that,
Hmm.
but it has become that. And I see that everywhere. And it's honestly, it makes me sick. Like, I have no problems with investors, you know, investing in the right assets or apartment buildings and whatnot. There's certain uh, classes of real estate for investors, but it's not every third home on a family street. Those are for families. So, you know, I'm in the position, and the reason I speak out and the reason I say what I say is not because I'm, some saint or something, because I'm not. I'm not an evil person, but I'm not a saint. I'm not going around, devoting my life and all my money to, greater causes. But it's because I have the option to. I'm at the position where I don't need to worry about, oh, someone might not use me, or I'm going to lose a sale because of something I say, right? That might not be aligned
Right.
with somebody else. So I'm
Right.
lucky that I have the opportunity to speak the truth. And I understand that many agents would be fearful, but by speaking the truth, you actually attract more people or better people that are aligned with you, that want to do business with you. And can I say my business has increased? No, maybe it has. It hasn't decreased, but I have probably changed my clients to those end users or those families that appreciate what I'm saying, and maybe lost some of the investors. Because why, like, an investor wouldn't use me, when I'm with my narrative and what I have to say, and they still do, but
Right.
they know where my heart is. My heart's with people that want to own homes and live in homes, and that's what I'm fighting for. So I guess that could kind of summarize my mindset.
Right. So that sounds like doing business with your humanity involved in it. So what does it do to you though when you see that more and more people are not able to afford homes? Just we can talk about that quickly. Does it touch you sometime when you see people not able to afford homes? And I saw also some analysis that there is more and more foreclosures in the axis of late. Like, what does
Hmm.
that do to you as a
Yeah,
player in the industry?
yeah. So we're going to see foreclosures, and we're going to see, or power of sales, because that's what they are in Canada, and we're going to see. And yeah, so first of all, looking at the people, it bothers me when families can't buy homes, and hardworking
Hmm.
families that deserve that could have bought them, because I know people, you know, less than 10 years ago, that were single mothers working at McDonald's and bought a home, and now hardworking double income families, regardless of education, can't buy a home. So yeah, that bothers me. But knowing that we're trending in the right direction is good, and that there is a lot of focus on it now, it's a very positive thing. So I just keep doing what I do, because I know that ultimately it's probably, in my opinion, it's the right thing, right? It's the right thing for society to head in that direction. So yeah, I'm happy that we're headed in that direction. I'm going to keep promoting what I promote, and I don't think what I'm promoting is a bad thing for society. I think it's a positive thing, and many people agree. Now, when you're talking, the argument would be, when it comes to foreclosures or bank sales and power of sales in Canada, sometimes I get the comments that, oh, you're happy that, families are going to be losing their homes that bought them during the pandemic. And of course, I'm not happy for that. They're victims of innocent victims, but was it their fault? Like, why did they buy these homes? Did they buy these homes knowing they weren't going to be able to afford the payments, or did they just go in blindly and listen to the wrong people? And again, did they buy the payment, or, date the payment, marry the price, right? So I think that they
Right.
might have
Right.
made bad life decisions. And, you can't say, well, let's avoid a real estate crash because some people made bad financial decisions that happen to be families, and they will recover. They will have a place to live. They will, they're not going to be on the streets. Usually people that are on the streets, there's an underlying reason, not hardworking families, right? So yeah, they might not own their home, but they might have to go rent, and they'll get back into the market at some point. But just for a few people that made bad financial decisions, and there will be many investors involved in this too, which will be way more investors that are going to lose assets than there will families. So yes, unfortunately, there are innocent victims, but there's going to be many more that will be able to enter the market and, have a family home.
Right. So speaking of innocent victims, I I've interacted a lot with a lot of my colleagues and um, friends, and in fact family, and it bothers me. It baffles me about some of the decisions that they made during the peak of the pandemic when they were buying their homes. And I must say that the trend I found is, of course, a lot of realtors were greedy during that period. Let's just call it for what it is. But then I found also that there was a lot of misleading information out there from mortgage brokers. I think, honestly, I think a lot of mortgage brokers assumed the position of financial counselors during that period and kind of twisted the arms of these people into signing variable rates mortgages. I find it absolutely insane that you had the opportunity to sign a mortgage for, say, 1.7% or even 2% or even 2.5%. Those are great rates. And these brokers, knowing that these are great rates, still made many of the people I'm talking about, colleagues, friends, family, sign variable rate mortgages on mortgages like nearing $1 million. What was the benefit in that for realtors, not for realtors now, for brokers, mortgage brokers? Did you see that also? Because I see a lot of that actually.
It would probably benefit the realtors more than the mortgage brokers, actually, because they're more people buying homes. But with the qualifications, you still have to qualify at the fixed plus 2% or whatever it was. So the qualification was very similar for these products. I think it was more of a cash flow situation for the for investors with true variable rates. But there was a lot of variable rate products pushed with the fixed payments, and those are the big issue right now, where people went into a
Right.
variable rate and their payment didn't change, and I think it was because they got them. Now mortgage brokers are paid on commission, and they're getting paid whatever percent of the mortgage, so they didn't make any more per deal, unless maybe certain lenders would give you a bigger bonus. But I don't think that was the reason. Usually it could be a little part of the reason, but it was probably to incentivize maybe people to buy more homes or to do more business by getting this lower payment and knowing that it wouldn't go up, right? Now, I
Mhm.
don't think too many of those mortgage brokers, and again, I'm just speculating here, I don't think too many of those mortgage brokers, discuss the trigger rate situation with the clients and told them that if rates did go up by X, you'll be in a 90-year amortization at this point. So, again, I think it was just a push for business as opposed to greater commissions, and that's what I see. But it did help. Yeah, it helped fuel the fire, and it helped promote more business for everybody.
Right. So I think about that now and I feel in the next 2 3 years, which we'll get to next actually in this conversation, in the next 2 3 years when a lot of these mortgages are going to be up for renewal, and those are the fixed term 5 year period, which I think a lot of people signed the mortgages in 2021, in 2022, which was the peak of the market.
Mm-hmm.
So in 2 3 years, or actually 2 years, you're gonna have a lot of mortgages up for renewal. In fact, I think the data shows that about $200 billion in value of mortgages are still gonna be renewed before the end of this year. Now we're gonna see a crisis here, and just for the sake of people maybe listening or watching this, what would be your advice to people who've locked themselves in a variable rate mortgage, for instance? Maybe the broker twisted their arms in the case of some of the colleagues that I've talked
Mm-hmm.
about. And now they're kind of kicking the can down the road. That's the way I see it. It's a matter of time. They're gonna be in a very big trouble. And for a lot of people, their payments have been triggered a few times already, and it's kind of too late to lock themselves into a 6.5% rate right now, especially when they think about the fact that they started off with 2.9%, 3%.
Hmm.
But what would be your advice? I know you're not a financial advisor, but from your experience, what would you think?
So yeah, there's two. I guess there's two parts or two scenarios. So the one would be the fixed people, the not the fixed payment, but the fixed rates. That okay, can they afford it? Like plan ahead. Can I afford this rate? And if so, it's gonna you're gonna sign a 2-year, 3-year term. Of course, I would expect by say 2025, 2026, I would expect interest rates to have come down a little bit for sure. So they probably won't be at today's levels. So they will get a relief there. But again, base your new payments, run the numbers and say, okay, can I afford this? And again, probably doing a shorter term fixed rate mortgage or something, right? Would be the proper thing to do. The scary thing is the unknown with the variable rate with the fixed payments and the extended amortizations. So what
Right.
happens when those people come up for renewal? And that's the thing I don't know. You know what? I was going to crunch the numbers one day, and it was so mind-boggling. I would have to talk to like a mortgage specialist or someone that works at the bank that deals with these things, because when they come up,
Right.
when your mortgage comes up and say your amortization is 75 years, you have to renew it 25 years max and get re-qualified. If not, I don't know how that's going to work. Usually when you have a 25-year mortgage and it comes up in 5 years, you just sign the paper without requalifying. But if you have to requalify because you're changing your amortization, say you're 25 years, it comes up in 5 years, and instead of just renewing for 20 years, you're saying, I want to redo it and go back to a 25-year, you have to requalify. They look at your income. So they're going to be looking at people's incomes,
Right.
and you can't just sign the paper. Because again, when you sign a renewal paper, you don't even need a job at that point. As long as you don't change anything, you're keeping everything the same, just sign it. You don't even have to show that you have a job. But when you have a 75-year amortization, there's no signing the paper. There's
Did you say 75-year amortization?
there's so many. So 30% of all the big banks mortgages are over 30 years or something, and they're saying over 30 years to you know to not scare the public or scare the investors. But I have like emails and messages from people when I put something out on X, a couple months ago, probably 3 months ago, and talking about this. And people sent me, statements that showed one was 95 years. And this was back in like March. 95-year, yes. Oh yeah. 95-year. I'll look for them and I'll send them to you. You might be able to edit them in after. So 95
Right.
year, and the other one was 72 years. And these are like, CIBC, like these are like Canadian banks. So, and that was months ago. Of course, interest rates are higher. This was before the 2 rate hikes in the summer. So rates are higher. And so what happens when they come up? They're over 100 years, many people. Now, okay, when they will start paying off more interest, because I'm sure that if rates go down in a year or two, that maybe they will be pre-trigger rates, because right now it's just they're all interest. And if you go to a mortgage calculator and you put in it only goes up to so much. Like I think you have to pay majority interest, and there's a tiny, like maybe $50, and you can't get any less, right? There has to be like a little principal getting paid off. So you can put in 50 years and you're paying off $50 in principal. You can put in 100 years and you're still paying off $50. You're just adding on years. So yeah, it's these amortizations when you come up. So what's going to happen? That's what I want. This is the biggest thing I want to know, and I haven't found any information on it. The question's been asked. You can find people asking the question. What happens when I have a mortgage and it's been a variable with a fixed payment, and I'm at a 90-year amortization or even a 70-year amortization, and my renewal comes up? Like,
Wait, take me through this actually, and you forgive my naivety here.
Mhm.
How could you possibly come up with an amortization of 75 years on your mortgage? And how do the banks advise you that 75 years of your life, if you're lucky enough to even live that long, you're going to be servicing your mortgage? I don't think there is anyone that will live that long, even if you're
No,
25 years when you bought that home, and at 75 years, goodness, you're
well,
near
yeah.
death.
Well,
So likely you're going to leave a mortgage for the next generation.
I hope there's somebody at these banks that makes a lot of money right now. Well, I know they're making lots of money, some of these people at the banks, but I hope they're figuring this out, because that's what I want to know. So what happens is, you know, they have the trigger rates, right? So once
Right.
you have a 25-year mortgage with a fixed
Mm-hmm.
payment. Once you get to, and it shows the trigger rate on your mortgage or on your approval, your commitment,
Right.
and your papers. And it says once you get to this, and it was like a lot of them were around 5% or whatever it was. Once we get to 5%, then this trigger happens, and you either can increase your payments, you can pay a lump sum, or whatever the other option is. Right? There's a few options. Well, nobody could afford to do any of those options, so they said, okay, we're not going to make anyone do. Well, some people did, but most people didn't. We're not going to make anybody pay extra because you can't afford it, because life's already too expensive. So we're just going to add years onto your mortgage, and then after that, we don't know. We'll figure that out later, because there's no talk about what happens after that. So yeah, it's like a ticking time bomb out there right now.
Right. Oh,
And this is,
goodness,
again,
yes.
it was 25, I think it was 30 actually. 30% of all big banks in Canada's mortgages are like over 30-year
Right.
amortizations right
Right.
now. And 30 is like the legal limit in Canada, but and they don't say how much. Like, okay, tell me how much. What do you mean over? I have statements that show 72 years and 95 years from March. So I want to know more. Like, there's people 100 years, 150 years, I bet, right now. And what happens is they're adding, and that number on renewal won't translate into years. They're not going to say, okay, let's renew for 75 years because it's against the law, and it's going to translate to dollars. So you say, okay, we're going to add, you're renewing, so you owed $400,000, which you haven't paid anything off, by the way, but your negative amortization, we've added years on. So years is actually interest they've been adding on, but they call it years. And they're going to say, okay, now you owe more than you owed when you signed the mortgage. So yeah, it's a very bad situation.
I think that is absolutely insane, I must say. Whenever I'm signing a mortgage generally, or even most things, I think my principle for such is I look at my income, I look at everything I make from everything I do. Can I afford it right now?
Mhm.
And will I be able to afford it the next 5 years? Will I be able to afford it the next 10 years until the end of the amortization period? And if I'm able to, then sure, I'll go into it. Maybe that's why I prefer the fixed rate versus the variable rate. I think that's a personal thing. Some people prefer the variable, but I like control over my resources. I think much more. Even my wife prefers that control over over the home resources.
Yep.
So
Well,
yeah,
historically, a
mhm,
variable rate mortgage was the rate changes, your payment changes, right? But again, you know, nowadays nobody wants to, see financial harm happen. So now we'll do this fixed payment, which was a new idea, a new product, and I don't know what year it came out, but yeah, so it was. But again, the historically, the narrative is, and it is true if you look at the numbers, variable rate mortgages are always better, and have always historically been better for people. You pay less interest, you pay off your mortgage quicker, and that's always been the way. But you have to be able to weather those increases and decreases in interest rates, where we've had not the biggest interest rate hike in 21 years or whatever it is right now. So um, trying to weather that for a lot, especially with the debt levels, right? It's not like we're talking 100 $200,000. The debt levels are so high that it's very catastrophic, and it's we haven't seen the full effect. We haven't seen anything yet, actually. So, well, that's coming. So,
So you think the storm is really coming in the next? Actually, I think you sent me the chart. So let's
yeah.
take a look at that. The stages in the bubble. Let's take a quick look at that. When I look at this, 1978 to 1981, it takes 42 months before the bubble bursts, and now where are we right now? We're about 28 months into it.
No, yeah. Looking at this chart here, we're the pale blue on the end there on the right
Right.
side. So yeah, so these are all the financial or the rate hiking cycles in Canada, and again, you can find these from just looking at historical charts. So in the 70s until the early 80s, there it took 42 months from the beginning of the rate hiking cycle to the peak until they reverse course. And I don't know a lot about the history back then, but of course they started cutting rates then, so they must have achieved or broke something at that point. I'm more familiar with the late 80s, the housing bubble. Of course, it took 31 months back then, and from the time they started till the time they reversed course, and of course we had a housing crash in the late 80s, early 90s.
Right. I think the rates even went up to about 14% in the 80s, actually.
Yeah. So in the 80s, we increased 5.8%. So that's the increase we went up from. So it went to whatever it was at 14. So we went from 9 to 14 point something. So it increased 5.8% in 31 months. The next one was 97 to 2001. That was the dot-com bubble. Not a big, again, not really a Canada issue, but of course we're so closely linked to the States and the world economy.
Right.
And that was only a 2.5% increase over 44 months. So that would be the least applicable. And of course, 05 to 07, before the 08 crisis, we got off very easy there. That was 28 months. And that was only a 2% interest rate increase back then.
Right.
So now we're at 4.75% increase from 0.25 to 5 from February 2022 to now, and that's 20 months. So again, I look at the data, right? Like, and they're all cycles, and you can see we're from 28 months to 44 months. So we have a good time frame there to deal with historically. So I estimate, and again, this is, people talk about, well, it takes 12 months to 18 months for the rates to really take effect. And we were only at our 5% rate from the summer of this year. So,
Right.
But again, from the start of the cycle, which was February last year, we're anywhere from June 2024 to October 2025 for something to break that, or for the soft landing, I should say. Right. So
and soft landing.
Yeah. And now when it relates to this is for the general economy, right? So when it relates to real estate downturns, from the peak to the bottom, it can take anywhere from 32 to 70 months. But to reach those prices, to get back to the peak pricing, which would be February 2022. Again, historically, looking at the United States, looking at Ireland, the Celtic Tiger, they had a big crash. Looking at Japan, which is a huge. Actually, Japan's chart looks more like Canada's real estate chart than the U.S. chart would, or than the Irish chart would. But the States took 10 years to reach those 2000. They were 2006 actually. The prices peaked. It was before the financial crisis. But it took till 2016 for those prices to rebound back to those levels. In Ireland, it took 15 years. From 2007, they peaked. It took until last year, 2022, for their prices to rebound back to 2007 levels. And Japan was like 30 years. So anyone that thinks 30 years, they still haven't recovered if you talk to some people. So anyone that says, anyone that thought this spring, or when they paused in January, remember Tiff Macklem did the rate pause and everyone went off to the races in the spring. That was like 11 months or whatever it was from the peak. Like, house prices don't rebound back in a year or two. It takes years and years. Like 5 years would be, especially at the levels we're at, would be impossible. You're talking 10 plus years to get back to 2022 levels. And I think 10 years is, those were pretty high peaks. You probably 10 to 15 years to get back. So anyone that's going to kid themselves and talk about things bouncing back that quick, I think they should just look at history, and it's never happened. So, and again, never say never, but we're talking pretty high predictability here.
Right. So let me take you to this next one here. You've talked about this a bunch on your channel, and interestingly, you find this stages in the bubble is actually applicable not only for housing; it's applicable for anything that involves the movement in the market. In fact, I was actually looking at the same chart for Bitcoin, which has been increasing in value also of late. I saw the chart also. It's exactly the same pattern. It's almost like this is it's a gold standard for any investment portfolio or whatever you can put money into. And if you look at this, you've talked about it extensively. Where would you say we are right now in this stage of the bubble? You've talked about it in passing already.
So yeah, we are just entering the fear stage. Now, my issue is I'm an impatient person, and I don't give time. It's time to work, right? So I always expect things to happen quicker than they do. But in real estate, it takes a long time for cycles to play out. But yeah, we're entering the fear stage. But again, that fear stage, entering it could take months. So we've gone through the bull trap, or whatever you want to call it there, and it's scary how how predictable and how relevant this chart is to the housing market. And again, I can compare it to the housing market because the housing market has been commodified and treated like the stock market. So I'm just looking here. Yeah, you have like everything. It's even the first sell-off. The first sell-off was back in 2017 or so, on the real estate, on the purple one. So
right.
And that was again because they did like a 1.5% or a 1.75% interest rate hike. I think it was 1.25. I think they went from 0.5 to 1.75. And I remember back in 2017, after they did this, there was like new builds and people weren't closing on them because of those hikes. But again, that was part of that first sell-off. And then, now we just went off to the races. And so we're definitely hitting the fear stage. If we're not already in it right now, we're right just entering it.
Okay, and I think that will make sense that we still have a few more months or some months to go before we get to return to the mean or return to normal. Because I think the idea here is you could literally put a line of divide, which will be like a mean line starting from even the stealth phase, and you could put it right there, and you're expecting that if you miss the bubble here where you have this hike in the prices, the mean should help us land somewhere around, say, 500 and something thousand. That's what we will expect eventually over time. Is that correct?
Yeah, and we're at what, 650 right now. So we went from 816 to 650, and I still have people telling me house prices will never crash. I'm like, it went from 816 to 650, and we're not over this, right? Like, if anyone to say, well, that's over now, the economy is going to recover. No, we're only starting like recessionary times, right? And there's nothing to say otherwise. There's nothing to say that 2024 is going to be a great year and everyone's the economy is going to be booming again. So and with the mean line too, and I've been very forgiving with that, because as you can see there on the red stages of a bubble line, we drop below, just like we go above the mean, we drop below it. So how far are we going to drop below that mean line? And things may help us again, not drop too far, such as immigration and whatnot. But that's I think we're going to get into that in a minute, so I won't say any more.
Okay, so we're going to take a second break here, and we'll be back talking about immigration and some other housing policy, and we'll see where that leads us. So we'll take a second, and we'll be right back. I know you're enjoying this conversation right now, and you can't wait to get back into it. But I'm sure you're also getting some value from this conversation. So it is a good time to like this video and to subscribe to the channel. You can also follow me at Revaluate on social media. That's on Facebook, Instagram, and on Twitter for more conversations like this. So let's get back into the conversation. So, talking about immigration, I think it's one of the excuses that people have given with respect to the housing market and the industry generally since the pandemic, especially. So I looked up the data. Let me show it to you here. The impacts of immigration on Canada generally. So Canada hit a record high population of 40 million people. That was this year. And why was that? A record population growth of 1 million people from January 1st, 2022 to January 1st, 2023. I think that's an astronomical number to think about it. And then they compare this to the 50s, where there was a little population growth, and the population growth in the 50s was actually the baby boomer era, where you had people having high number of births. That's post-war in the 50s. And a little bit of immigration was also responsible for that in the 50s. But now you come to 2022, the major factor that contributed to the million people that added to the population in Canada is due to immigration. About 96% of the 1 million people actually came from immigration. That means automatically that we can assume that birth rate has not increased significantly, but immigration has increased significantly in 1 year period. Now, the more interesting thing here actually is 1 in 3 non-permanent resident holders is showing their living conditions here. Two things are interesting to me here. Out of the immigrants, about 60% are apartment rentals, right? I don't know if you see that properly at your end, do you?
Yep.
So 60% of the people are renting apartments. And then homeowners among the immigrants is about 15% that are able to own a home. And I was listening to Steve Saretsky talking about the impact of immigration on the housing industry, and one key thing he identified was the fact that when it comes to housing and prices, the ability to purchase a home far outweighs the desire to own. And I think that's applicable in anything, in fact, right? If the desire to own anything was equal to the ability to own it, then, if wishes were horses, right? A beggar would ride. To worsen that, let me give you one last example. So I was in Sydney, Nova Scotia. That was just a few weeks ago in September, and the housing crisis there is absolutely insane. And so I was in Sydney to join some community work there, and they asked me to give a talk to some of the immigrant families that were there. And believe it or not, some of them came into the country a month, 2 months after, they're still not able to find a home to rent. No apartment to rent. They can't buy, of course, most of them can't even afford it. And then you see them staying in hotels where they're paying about $4,000 a month. That's what the people are dealing with out there. In fact, I think Sydney, Nova Scotia declared a housing crisis ongoing in that city. When you put all of these together with you as a player in the space, what does immigration mean to you in the housing industry?
Well, it's very sad, because why I want to know why. Why have we increased immigration so much right now, or the government, right, in the last 2 years? And it's not. I don't think it's for the benefit of the immigrants. The immigrants think it is when they're coming to Canada, but I don't think it is, and it doesn't make sense. So we have a housing crisis. There's not enough homes for people, and they're too expensive. Actually, I think it's more of the homes are too expensive for the most part. But regardless, there's a housing issue. So what do? Let's invite 3 times more people, or 2.5 times more people than we usually bring into the country, and see what happens, knowing that they're not going to be able to afford homes. So I think that honestly, it's and I've heard this, and it's sad, and I don't want to. I don't even like saying it because it cheapens the term or the past and the history. But it's like a modern day slavery. Like you're bringing these people in to pay for one, and they've been very clear that why they bring them in. They're bringing them in to support and prop up GDP. They're bringing them in to pay for Canadians' retirements because you need. It's a Ponzi scheme, right? And it's sad. Like it's so sad. The only way to keep a Ponzi scheme going is to bringing new people in at the bottom, and this is why they've increased immigration. I don't see. And they'll say, well, we need more skilled workers, but they bring these people in and they can't work because their requirements aren't met here. So they should be brought in with those tests being met or those requirements being met and being put to work. Now, most or half of the immigrants are non-permanent residents, which are students and foreign workers. And the students are, the students too, you hear stories about the students that are promised one thing, being sold something from their country, and being told, come to this school. I heard the one story, come to this school, you're taking, you want to take this. And the advisor in their country said, no, you should go to this school for this business administration job. Anyway, this person comes here, they take they show up for the school and they say, well, we changed your course to hotel, hospitality, and tourism. And she says, well, I was supposed to be taking business administration. And they said, well, we do this. And so the people, it's not for the people's best interests. They think it is, but Canada's intentions right now are not for that reason. We've always had a consistent model of immigration, consistent numbers. And once we enter crisis mode, we enter high inflationary times. It just doesn't make sense that you increase immigration by 2.5 to 3 times, depending on the year.
Mm-hmm.
So I think that, and now when it comes to housing, they're not going to prop up the housing. People say, well, the argument is, well, prices won't go down because of all the immigrants. And as in the data you showed, like 15% approximately will buy a house. And that's buy a house when, not right when they get here. This is, in a year to 3 years when they qualify and they have a stable job. And, immigrants are not rich for the most part. Some people say like, oh, an immigrant, these rich immigrants can come. And there are certain immigrants that are rich that come, but the majority aren't. The average immigrant comes with $50,000 in savings. And I think that's the average immigrant family. So, and again, I'm an immigrant, and my parents came with 30,000 pounds back in 1988. So I can relate. And there goes a car, there goes your first and last rent, right? So half of that is eaten up instantly. Plus you have to live, and $50,000 for a family, even without a car, it's going to last you a year. And that's living frugal. So honestly, I hate to use the term, but it is, they're using these people. They're using these immigrants to prop up the Canadian economy. And you can look at the numbers when, our GDP or our unemployment, say, we have, 1 million new people. And I think it was, divide that by 12 months. We created 60,000 or 63,000 new jobs in September, whenever the last report was, and our unemployment rate stayed the same. So there again, if we had normal immigration, our unemployment would be rising. but it's a political tool. These are political. Um, it's a political tool that the government's using to prop up numbers, and I don't care. It's not going to work whether you're trying to prop up the housing or whatever. It's just going to create a bigger crisis, as you've seen. In my city, I live in Niagara Falls. My friend was working. He does construction, and he said he watched. They're living in hotels. These people, these immigrants and migrants and refugees. Asylum seekers. He said he watched 20 of their children. The school bus now stops in front of hotels to pick up the kids. This never happened. This is and how long have they been living there?
That was exactly what I saw in Sydney as well.
Yeah, and so I think it's and I don't know how these people are getting integrated into society. Do they have support for so long and then it's sink or swim? But I don't think, from what I've seen, they have a great support system for them. It's kind of some social welfare system, and then who knows what happens after that. But I've seen a big change, and one last thing I just want to add, and again, somebody commented on this, and now we're using hotel rooms as housing, and we're using housing as hotel rooms with Airbnbs. Like, this is how backwards our society has become. And if it was benefiting people, I would say, I'm going to shut my mouth right now, but it's not. It's these are the problems, right? So, it's sad, and I think that most people are scared to say we shouldn't be bringing in so many immigrants because you're discriminating against immigrants. It's not discriminating against immigrants. It's not in their best interest.
Right. I totally agree with you. I'm an immigrant too. I'm a first generation immigrant. And when I complain about such, it almost sounds like you're an ingrate. But then I will say I have lived through it. If anything, there is some level of credibility to what I am saying with respect to the living experience for an average immigrant family that is going to run through, burn whatever they come into the country with within a space of a month. And to worsen that, you don't have any employment going for you. So what happens? Why do we now see 3 times the number of people that used to be at the food banks? We saw that, right? Just at the last Thanksgiving, about 3 times the people visiting the food bank right now. And a major contributor to that is immigration. And let me show you one last figure here from what I picked up from what you shared with me. The impact on immigration is, I think it's insane to think about. So this is sales of homes, right? And immigration is going up. It can't even keep pace with that.
Yeah, so it's, at first I put this out to say there's an inverse correlation, right? So that, the less sales, the more immigrants. But I think this just backs up what I said, and it just proves, the economy, the sales start dropping off, or they know, right? They know that things are getting bad, so they increase immigration to prop up the areas that are suffering in the economy. So again, you're bringing in people, they all have a little cash, not too much, and it just supports the economy, but you're just making the problem worse. And I don't see it fixing itself. And you can look back, like, even to when, not the extreme times now, but 2014 and to 2015, sales were increasing and immigration was decreasing. And, back to before 2008, sales were decreasing, immigration was increasing. So it's, I'm sure there's a lag time when immigrants come, but still there's, an inverse correlation there. And of course, immigration, you can predict what's going to happen from here on. Immigration will start to decline. The levels of immigration, these are levels, right? They'll start to decline. And of course, the sales will start to pick up in the next, couple of years from now. So it's just like bound to happen. But again, it's the relationship between immigration and housing or sales is not significant like people think it is.
So let's put all this together as we try to start rounding up on this. The Canadian government has taken a few actions. Some of them, in my estimation, make sense. Some I found ridiculous. Let me show you some here, actually. So here you see one of the measures is a 2-year ban on non-resident, non-Canadian purchasing residential properties to help curb speculation. The third one here, introducing the new tax-free first home savings account to allow Canadians save up to 40,000, and then doubling the first-time home buyers tax credit. Another one, a third round of the Rapid Housing Initiative, and then I think the ridiculous one I found here is the top up to the top up to the Canada Housing Benefit in December 2022, which provides low-income renters with up to $500 in payment to help augment their rental. What do you think about some of these measures? I think if I am to use the Nigerian way of saying this, it's almost like you're administering the medicine after death to a person.
Yeah. So I'll start with the ones I could agree with. Do I agree with them? Non-time specific ones I agree with, because again, I hate when I see governments implement things for political gain. But the one that I like the most would be the first time home savings account, like the TFSA, but it's for a house. I like that, but they just replaced like the RRSP. You could take your RSPs out to buy a house without being penalized. So they kind of just replaced that with that thing instead. So, but again, it's at least there's something still there. The tax credit, sure, it's not going to really help you buy a house, but they're going to give you a tax credit. But it won't even offset. That won't even offset your expenses when buying a house for, say, the increase in land transfer tax with the higher house prices. But again, at least there's a tax credit, and it helps first-time home buyers. The $500 now, yeah. So the $500 it's a joke. Just like the $500 or whatever it was, I think they gave people for the grocery rebate. This is you shouldn't be at the point where you're supplementing people's grocery bills because they're so unaffordable. And again, that was what's $500 going to do for you? So maybe for 2 months it will give you the money to cover the groceries you couldn't afford, but it's not going to last you years. It's going to last you a month or two. And what people did, and I think that we saw the inflation numbers increase, and I don't know if it had anything to do with it, but I said, watch, everyone's going to go out and spend their $500. So all they're doing is printing money to boost the economy. So they would have, propped up GDP or spending or retail sales or something with those numbers to, again, kick that can down the road. I forget what else was on that, but there was nothing really significant that stood out to me. But the rest of it was just, political posturing to make it look like they're doing something. What do they have to do? Oh, the ban on foreign buyers, investments, and whatnot. So I believe, and I think that now everybody is coming around to the reality that the problem with the supply in Canada was not always just a supply issue. It's now going to become a supply issue when you have millions of more people coming into the country every year. But I've proven, back with many charts prior to 2022, there was no supply issue. They built more than enough homes. It was a demand issue, or an excess demand issue from investors and from overinvestment because of ultra low interest rates. And it's a compound. When your asset increases by 50 or 70%, the avid investor will take some of that capital appreciation and invest it back into another asset, or maybe the same asset class, because it's performed so well. And this is what happened with real estate. The real estate performed so well, they took the money, they took some of the appreciation, refinanced their house, and put it back into the market and bought more homes. And that was if prices didn't run up. If prices weren't runaway prior to the pandemic, that wouldn't have happened. And of course, during the pandemic, that happened. But that was the problem. So when we talk about policy and things, and I actually had met with somebody in the Conservative Party, one of the directors, local directors, that just wanted to, again, just have a conversation about it when they're forming their policy to see what do I have to say and what do I think. And so again, the root cause. What is the root cause? Well, a lot of people say, well, the root cause is we don't have enough supply. No, that's not the root cause. The root cause was there was too much demand because of investors, not because of families. So how do you fix that? Well, as you stated earlier in our talks, investors need somewhere else to invest, or investors only had real estate to invest in, so they need to invest elsewhere. Where else should investors be investing? Well, they learned in the stock market after '08, even in Canada, they lost a lot of their wealth, right? So they were scared off from the stock market, I'm guessing. So real estate became the safe haven instead of just like gold would be, but gold doesn't make enough money. So real estate's the safe haven. And so we need, and again, when you're investing in real estate as in rental properties, they should have in purpose-built rental opportunities. The problem now is the purpose-built rental opportunities are not purpose-built rentals. They're pre-construction condos that individual buyers will buy that are supposed to be for family. Condos are supposed to, again, be for end users and families or people living in the city to buy, not investment rental buildings. But that's what condos have become. And like 40% of all condos in Ontario are investment owned or investor owned. So, and do I believe in regulating and punishing investors and saying, let's charge them, you can only own 2 homes? No, I don't believe that's the solution. I don't believe regulations and punishments are the solution to anything. I think that having other opportunities for people to invest in. So the problem with, if I want to build an apartment building, I can team up with someone that owns the land, create a nice billboard, pre-sell 70% of the units, and then build the building. And I need very little cash when compared with building a rental building. To build a rental building, I need to own the land or have someone that owns the land with me. I need to have that 25% or 20, I think it's 25% cash on hand. And then CMHC will fund the rest, or will insure the rest for funding. And it's very cash intensive when I can just build a condo building. And so therefore, we're not building purpose-built rentals. And of course, you look at the data and it's like 20, 30 years old now, this problem, because it hasn't been a good business opportunity for people. So we need to have those business opportunities to allow this to happen. Now, the government, the one good thing I said about a couple of announcements they made was, the one was rental units, I think, in London. I think you might have it on your list of things to talk about. And that's great, but we need more than 3,000 units or whatever it was. But it's minuscule, and the federal government says that housing's not their responsibility, and people tell me this all the time. It's not. It's provinces and municipalities. But now we have the government going around taking credit, making these announcements like they're building homes. So I'm like, even I'm getting away. It's not their responsibility, but why are they going around making all these announcements? Because they're injecting cash into housing. But how long is that going to take to get built before these units come online? We need massive amounts of units. So I think, I think that government policy, it needs to be a positive, rewarding policy, but it needs to be geared. You need to get the investors investing in the right parts, not in residential units. Because if I give you 2 million residential units tomorrow and say, here they are, do you think it's just going to be families lining up? Well, first, they're not going to line up at the prices right now anyway. But the investors, if they see an opportunity, they're going to buy more than half. So they need to have their own ways and things to look at to invest properly, and so that it's creating units as opposed to they'll be taking units away, right? They should be creating units for investors. And honestly, there's like many things. There's many solutions to that. You can say, maybe it's some real estate investment trust that's on a different level or whatever. But I don't know what the solution is. But I know the problem. I guess we could brainstorm a solution with the right people.
Right. So I think at the end of the day, the problem here is that people are torn in between horrible government policies. In fact, if I cast my mind back to a tweet I saw, I don't know, I don't remember now who had that tweet up, and he had said, or she had said, that it's not the role or the duty of the government to provide housing for people as they even come into the country, which I sort of disagreed with. If it's not your duty to provide housing, the houses are not even there. Your policies are not favorable. That's what's going on. So if you say it's not your responsibility to provide housing for people, at least provide the policies that will enable housing to be put in place. But right now, they're torn in between, don't even know what to do. And whether you've been here for a long time, it's a problem. Whether you're coming in as a new immigrant, is a problem to deal with. So you've also talked about this extensively on your channel. Each time I've listened to you, you've talked about the need to revisit the housing model. And I think what you specifically mentioned is we need open bidding. And when I think about open bidding, the only business model that I've seen that replicates such right now is by one of the local companies, which I don't know if I should be mentioning right now, Unreserved. They tried this model, right? I don't know if you're familiar with Unreserved. They tried it
Nope.
at the peak of the pandemic. I don't know. Maybe they're actually here in Ottawa. Maybe they don't cut across the rest of Ontario. They tried it, and I must say, my problem, first of all, with such a model is they struggled to define what it is specifically, and their purpose was not clear. But I must say they did well, relatively well, during the peak of the housing market last year. And that was because anything would do well last year. The competition was high. And the part of the problems I had with them is they couldn't tell specifically how they will curb issues with imposters or machineries being hired in the process for open bidding. Like, what happens if I bring my friend to bid or bring my relatives to bid in the open bidding? I inadvertently or willfully inflate the price for such housing in this case. So when you talk about a new business model with respect to open bidding, how does that help the housing industry?
I think it's all about transparency and even options, because maybe it's the lesser of two evils. But how, homes need to be sold somehow with some sort of bidding process. And right now we have secret bidding. Secret bidding that they have created new rules within the real estate industry to say, okay, well, you have to save the offers on file for 7 years or whatever it is. And if anyone complains, then the real estate council will come and audit you to make sure you have those offers saved. But you can have phantom or fake offers submitted also by friends with that. Like, you can create an offer and get someone to sign it and say it's a valid offer. So I think there's always going to be that fraudulent activity for some people, right? And I don't think it's as widespread as maybe some people think it is. It does happen. Like, there was an agent there in Montreal or something that got caught, submitting fake offers on her own listing when others were competing, and like caught red-handed and fined and whatever else. So, but it's not that common. But I have heard stories even from my clients that new agents that had, when they listed their house, they promised them, oh, I'll get a couple of other fake offers in there for you. So it's not unheard of either. Will we ever know the levels of how bad it is? No, probably not. But yeah, you always got to look at ways to eliminate that. But we are coming out with open offers. We have the new, TRESA regulations, or the TRESA Act. It's called the Trust in Real Estate Services Act, something like that. It's called a trust me. This is called a trust me rule, right? And I don't really like the wording on it, but anyway. And there's 3 phases to that. The first phase was, real estate agents can open a corporation to save money on taxes, which was the first, right? That it should have been the last. The second is coming into effect December 1st, where they're changing the buyer representation. It's all about representation stuff, and there's a few other things in there. But the main thing is, before you could be a client or customer, now you can be a client or you're not. You're self-represented, right? There's no more in between. And a couple other big things, but again, nothing. It's all about representation. The third phase, which is we don't know when it's coming, is open offers are allowed. And now the open offers are to do, it's optional, and it's in the seller's discretion to use or not use them. So it's the seller's choice. So here's an example of the way it's proposed right now. You're selling your house. An agent brings an offer, and it's closed. You say, I want closed bidding. I want secret bidding. I don't want the prices disclosed to the public. And you get to choose what you can disclose: the price, you can disclose the closing date, everything but personal details of the buyer. You have the option. But you say, I want secret bidding. Then they submit the offer, and you say, I'm going to sleep on it. You wake up in the morning and you say, you know what, to your agent, I've changed my mind. I want open bidding now. Let's make all this public. So now you can make that the details of that offer public. And again, it's about seller protection, it seems, not about consumer protection. It's benefiting the seller more than. So I think that you have to, you choose one path or the other, and I think it should benefit both people. Now, even though the sellers are in control of this, and I brainstormed this a little bit. So the sellers are in control, and but the buyers might turn around when it's a buyer's market like it is right now and say, I'm not offering on your house because you have a closed bidding. And so they'll go to the houses that have the open bidding. So then the sellers won't be in control. They'll say, the buyers are only going to just offer on the open, transparent bidding processes. So it's going to be very interesting to see how it works. But I think, you have to watch out with these fake bids on either scenario, in the open or the closed.
Right, especially when things are also digitized, you want to make sure people are not bidding with bots.
Oh yeah,
you could do that too. So let me show you one last slide for today, and that's still with respect to a new model in the housing industry. One of the things you identified is the fact that some of the things might actually protect the seller, but not the buyer. One of the things people have talked about is that the issue of commission for realtors, and I'm playing the devil's advocate again. Maybe people listening or watching will take interest in this, and of course, it interests me too. As being a part of the society dealing with this kind of things from time to time. Like you look at the UAE, for instance, the commission is about 2%. You look at Japan, of course, they've been in housing crisis for a long time, like you said. It's about 1% to 2%. It looks like the rule here is about 2%, the median in commission. But then we come to Canada, because of the way the market is set up, you're torn between 5% commission. I first came across a video on CBC Marketplace, I believe that's like 2 years ago, where somebody had explored the option of a low commission model in the housing industry. I think the man's name is Stephen Moraines, who had tried that model in the early 2000s. One of the things he talked about was that he came into the industry as a disruptor, but then he realized that he quickly came with the attacks from the industry, and the attacks in the industry in this case is coming from the industry, it's coming from the board, it's coming from the regulators. His hope was that you will be able to sell your house by yourself on MLS, And by doing that, they will just do the marketing for the seller. So in this case, I think the range of the commission it was looking at that time would have been about $800. But then, of course, it faced a whirlwind of people's courts of opinions, and the business didn't last more than 2 years. So it looks like the realty industry is like an old boys network here that will eliminate any other thing by crook or by hook. But do you think a low commission model actually will work in favor of the industry?
So I don't think it's about the commission model itself. I think it's about wages, right? And of course, you can say realtors are overpaid, and I would say for the most part, yes. Like especially, case by case, for sure. Some agents, the average sales per agent is 2.7 per year, right? So then no, they're not overpaid on average. But I don't think it's about. I think low commission or low rates, even we won't even call it commission, we'll call it a rate. I think it would hurt the overall industry, not just obviously it would hurt the realtors, but I think it would hurt everybody, because now people don't want to work, right? Your agent's not going to care if you get a good deal or if the house is the right house for you, because they're not represented. They wouldn't represent you for that much. I think though also there is merit to say, like, yes, real estate commissions are high, and they're too high, especially if someone's charging 5%. Actually, the States is the same. The States is even worse than Canada. They're like 5 and 6% still. And again, I don't want to. There's no such thing as a standard commission, so I'm not allowed to say that. That's a big no-no in my industry. And I could confidently say that 5% is not an industry standard in Canada. It varies, right? In certain parts of the GTA, they charge 3% or 3.5% total. In the West, they charge 7% on the first 100,000, and 3.5% on every 100,000 after that, or whatever the model is. So it varies where you go. But I think that it is old and outdated, and even all the systems, right? Too, and I don't know if we're going to get into that next, with the digitization and whatnot, or if we want me to comment on that now. But yeah, it is an old boys club. They don't like change. We have, all these boards that with technology now, we shouldn't have so many boards and have all these offices. But, to change this, you have to lay a lot of people off. You have to, close down board offices. And that's going to upset a lot of people, just like, interest rates going up and people losing their homes is going to upset a lot of people. So yeah, change is painful in the short term, but it's beneficial in the long run. But again, as long as that change is done right, and that goes for like everything, the environment, right? Ultimately, I think people, they want what's best for the environment, but you want me to suffer now, and is it the right thing? Are you doing it right? So yeah, low. Again, I would say yes. So many people have come into this industry, and again, pumped up just the real estate industry in general, which is way too much of our GDP in Canada, because it's easy money or a get rich quick scheme or whatever the case may be. So I think that, yeah, it would probably reduce or force those part-timers out. And because a lot of people, they have their jobs, but they say, well, I'm going to make an extra $50,000 a year in real estate. And they're taking away from the full-time agents that are doing this. And then you have people saying, let's reduce commission and all the rest. So yeah, I agree that the commission model needs to be revamped, and the whole industry needs to be revamped to reflect today's technological ways much better. And there's a lot of things I could say about that, but I'll just leave it there for now.
Right. So, in as much as I would have loved to go into conversations about digitization, but I would like to wrap up on this question actually. And again, I've been playing the devil's advocate here, and I'm glad you've not thrown any stones at me yet. So, looks like we're on the same page here for the most part. So, I moved into Ottawa just a few years ago now. One of the striking things in the housing industry in Ottawa for me is that it's bombarded by townhomes, not detached homes. I would say that was different coming from the East Coast, but this was before the pandemic of housing itself. But I came into Ottawa and there's a bunch of tiny homes. To be honest about this, and I saw the opinion of friends actually just before this, having this chat with you. And I realize a lot of people share my perspective on this. You go into these homes, especially the ones built during this period, 2020 up until now, they're absolutely almost useless. You go into the main level, it's almost like you're looking for, yes, gone are the days of having a living room in the house. The open concept has taken over now, but you go in, you can't even find where to put a sofa or a love seat. If anywhere, you will have to put it in front of the kitchen island. And you have to stick your TV on the wall right in front of the kitchen island as well. I've talked to agents, especially when I was in the market searching, and they could care less what you think about it. So on one hand is the builders keep building this bunch of garbage at premium prices. On the other hand is that there's a bunch of townhomes, and now that we've talked about the major beneficiary in the industry, which is the government, it looks to me like the government is actually approving townhomes because it's more beneficial to them. But now you have builders also who make homeowners stuck with this piece of crap that they build and at premium prices. Now, I've asked this question, like where should your living room be? Should it be in the main level and not even living room, maybe living area? Should it be in your main level? Should it be in your basement? Agents could care less what you think about that. But you've been in industry for a while. Like, how does this make sense?
Makes perfect sense to me. So they're not building the homes for you and for me or people like me and you. They're building the homes for investors who are never going to live in the homes, who are going to rent them at X number of dollars and it paid X number of dollars. And the numbers make sense, just like they make the shoebox condos in Toronto. So it's just, they're not building homes for people to live in. They're building homes for investors to buy, and people are going to be forced to rent them. There's the one example I tell the people all the time was, I've seen many builders in my area, and I worked closely with one of the sales reps, for the builder. And the problem is when people line up, and he's told me stories about, new condo developments. It would be all investors lined up at these releases, lined up waiting for the doors to open. And so when they show up, first of all, they're emailed. All the agents are emailed. Get your investors here. They're not saying bring your families. They're saying bring your investors. Bring your investors. Great investment opportunity, right? They're not targeting families because they show up. They show up with their deposits, with their and it's a structured deposit, but they show up with the first part of it, and they say, "I'll take the 3-bedroom," or "I'll take the 2-bedroom." When the family shows up, the family says, "Oh, I'd like a tour through it. I'd like, how big is the bedroom? Where can I put the TV? Where can I put the investors don't ask these questions. They just show up and say, I'll take a 2-bedroom or a 3-bedroom. So it's been so much easier for the developers and the builders to sell to these investors and the agents. It's been this biggest cash cow. No one's asked any questions. They don't say I need time to get a financing. They just do it. And that's the problem. They haven't been building homes. They've been built, and it's, we talk about who's been buying the homes. Yeah, we already know the investors have overbought and the demand has been too strong. But the developers and the builders have been in bed with them, literally building the homes. The one builder came to Niagara. They built the biggest homes you could buy with the cheapest finishes because that's what investors wanted. Just give us the biggest square footage for the cheapest price. We don't care if it's chalk on the walls, and it literally was chalk on the walls. Like it'd come off on your hand, like you rub the wall. It's like, so, and I'm laughing because it's so outrageous that what else can you do at this point? The damage is done, and everyone laughs at these neighborhoods, and the baseboards will melt off because they're made of cardboard because nobody would upgrade to wood or whatever the case may be. So yeah, the builders have enabled this, the developers have enabled these construction of these, and the cities have, because the cities, we have a rule that you have to have a 40-foot minimum lot for a detached home in Niagara, and the builders come in and says, well, we're going to build 1,000 homes. We want 27-foot lots. So they're not just inside, outside, they've been getting smaller too. So they're putting these detached homes on these townhouse size lots, which is, so now there's no parking. Everyone's parked down the streets, and they don't, and then on top of that, they're making apartments in the basement. So there's even less parking now. So yeah, it's and they'll say, well, there's just so many people nowadays. No, they've just designed it like this. Yeah.
Right. And when I compare this, finally on this thought, when I compare this with other industries, let's even take, for instance, the automobile industry, right? Gone are the days when if you bought a Ford vehicle, it's found on road dead. If you bought a Hyundai, it wasn't long lasting. If you bought a Kia Picanto, it was a useless car. Gone are those days.
Mm-hmm.
Literally now, you could go in the market and pick a brand that you like, a model you like, because the quality in some ways has cut across the spectrum of the manufacturers now. In fact, you could save a lot buying some model versus the others now, because there's also some level of competition going on there. But you compare that with housing, the quality has been degraded, the space has become choky, and to worsen everything, it's almost impossible to buy at the premium prices that they're putting these houses for right now. So it's like, either ways you look at it, people are toast going through this problem. And one of the reasons why this conversation is important to me, when I was even thinking about having a chat with you, is I think every human being deserves to have the three basic things in life: housing, which is shelter, food, and clothing.
Mm-hmm.
I think everyone should be able to afford that, come what may. And it could be whatever quality, depending on your personal economic situation, but everybody deserves to have that. And when I look at the level of homelessness and look at the level of poor housing going on, it's one of the reasons it's concerning to me. And that's because I also came into the market as a buyer lately, right, after
Mm-hmm.
my relocation, and realized that this is an awful problem. And all we get from the key players, or the policymakers, I should say, uh, take for instance the Office of the Diversity and Inclusion, something that who has been on the news for the longest time right now, is nothing but rhetorics that don't really help anyone. In fact, sometimes it's lies about, oh, I rent out my rental properties below the market price, which is outright nonsense. It's a lie. But maybe final words on this. Where do we go? And what should people be looking forward to next with respect to the housing industry?
Well, hopefully it doesn't get any worse. For one, hopefully we are at the worst point of affordability in these times. I would hope that things that they could just hope that things get better. And I think that it's having, sometimes there's a lot of, you ask a lot of people, and whose best interests are first and foremost, whether it's the government or whether it's your realtor or whoever it is. It should be the people, it should be the country. But there's a lot of distraction. And I understand there's, sometimes you have to make this person happy to make this happen. But, and I think that we need change. Change is always good. So we need change at many levels. We need to change our government. Unfortunately, I don't want to get into politics, but I think most people would agree, and the polls show we need to change. I couldn't wait to change the last government, but it's because they had ran out of time. They did what they did, and it gets to a point where you're just not doing your service anymore. So that's definitely what we need to change that. we need to update and change the policies in general regard with housing and building and permitting and all the rest of that. There's obviously major changes. I'm not an expert on that, but it's very clear that major changes are needed. So I think that changing for the better and making sure that we're voting. It's all about voting too, because the government, they make the rules and they make the policies, but making sure we're choosing the right people for the job and that they're doing it properly. And again, it doesn't matter where you are. It doesn't matter if it's, again, your realtor, your government, your school, whatever it is. Make sure that you're supporting what you need to support instead of being distracted by rhetoric and division and everything. And so the minister, right, of housing and ex-minister now at this point, but what was it? What was his name again? Or not his name, but his title, equity and inclusion. Sorry, that was it. Where
Ahmed Hussein.
Yeah. So what did he do for housing, and what was his job? Was his job to be equitable and inclusive to who? For what? Was it for housing? Like, it was very misleading. It was just like a title to give somebody to, signal to the world that we have, or to the Canadians that we have this person. So I think that there's a lack of focus. We need to focus. We want to build houses. Let's build houses. I shouldn't be hearing announcements about building houses. I should be seeing them being built. And I think that's what we need. We need to change, we need to act, and we need to focus on what needs to be done instead of worrying about, political gain or what people think of us. It's action. We need action.
Right. Well, here we go. Action and change of policies, and hopefully if I use your words, the Ponzi scheme in the immigration part of government also stops. I don't think the Bernie Madoff model has helped anyone, not even Bernie Madoff himself.
No.
So it's time to change things here. But thank you very much, John Flynn. It's been such an honor chatting with you through all these topics concerning the housing market. And hopefully the next 1, 2, 3 months, we'll find another chance to come together again to have more conversations like this. Thank you, John.
Yeah, thanks for having me on, Fola.